Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, November 29th, 5:08 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend. Went into the uptrend as of the first day of November and the second day when we had follow-through day on the NASDAQ on both the NASDAQ 100 and the S&P 500. You can see the trend gauge over here where you've got the green arrow on market leadership. It continues to act just fine. Then looking at the five major indexes, all five are above their short-term 21-day moving average and the medium-term 50-day moving average. Mixed bag when it comes to the 200-day moving average, as small caps failed again to get above that key level. Dow, S&P, and NASDAQ 100 firmly above, mid caps hanging above also. So what happened today? Really a mixed bag and a disappointment for the bulls if you are looking at the indexes, but there are reasons to be optimistic and some reasons to be disappointed. We'll get into that when we look at the charts. But basically what we saw was the S&P and the NASDAQ gapped up and reversed lower, and they were dragged down by the Big-7. So what the Big-7 giveth, the Big-7 can also taketh away, as 6 of the 7 ended up negative on the day. The only positive of the 7 was NVIDIA, up 0.7%. Small caps and mid caps gapped up 1.2%, closed up 0.6%. So they gave some back also, but leadership for the most part continues to look good. Here are the final numbers. The Big-7 down an average of 0.84%. RG8, this is our 8 growth ETF composite, up 0.63%. So again, you can see the divergence right there between leading growth stocks and the Big-7. S&P 500 gapped up 0.45, was up as much as 0.7, and then reversed and closed closer to the low of the very close to the low of the day, down 0.09%, and again dragged down all. The Big-7 was definitely the drag, because you can see the equal weighted S&P 500 up 0.4%. NASDAQ 100 gapped up 0.7, was up as much as 1%, ended up down 0.1%, but the equal weighted NASDAQ 100 up 0.6. Dow just barely positive, mid caps up 0.4. Russell 2000 small caps up 0.6. Global 60/40 stock and bond up 0.2%. This is all bonds. Global stocks were flat on the day. In-house GROTECTION positive by 0.33%. So when is a failed breakout a true failed breakout, and when do you stick an asterisk by it? And that's kind of the theme of tonight's video. I've been pointing out this tight 5-day range, and at the beginning of the day, we had an absolutely beautiful gap out of that level. That lasted until 10 o'clock, and then we reversed lower in 2 big waves down, tried to rally back up. But this 45.68 level that we've been referencing, gapped above it, held it, fought around it after that first pullback, rallied up and failed right there. I don't know what it is about 45.68, but it seems to be a key level, and until we can get substantially above it, the equal or the market cap weighted S&P 500 anyway is a failed breakout today. Now it's not a failed, the big day of the breakout was the 20th here. We consolidated for 1 day, then tried to work our way higher, and we've been in this range. As long as we hold this 45.25 to 45.40 on pullbacks, things are disappointing, but really not that bad. And one of the reasons I say really not that bad, because if you look at RSP, the equal weighted, the breakout closed near the bottom of the range, but arguably it stuck, or it closed right there, just a few tenths of a percent before it. But again, big move up, then the move down, rallied and failed, sold off into the end of the day. So RSP, if you look at it on a daily chart, looks like it broke out, still closed at the bottom of the range. Let's go to the NASDAQ 100. Same 15-minute chart, and this is very clearly a failed breakout. Here's the level we've been referencing, big gap above it. came down, battled around, made a lower low, tried to rally up and failed and closed near the lows of the day. So this break higher is intact. Today's break higher is a failure. And if you look at a 60-minute chart, actually a 30-minute chart is better. This was 11/3. This was the day after the first follow through day, and you can see we consolidated a little bit, worked our way higher, broke out again, and then broke out above this level, and then trying to work our way higher, but just not really succeeding. And this is the Big-7 have been a bit of a relative drag on the S&P 500. And the way I really tell this is by looking at FNGS. This is the FANG Plus Index, which is the Big-7 plus Netflix plus AMD plus Snowflake. And if you look at a 60-minute chart on this, you can see that the breakout today barely got above the highs from the 22nd. So no progress at all. So you can't even say it's a failed breakout if you didn't really get above that level. Or if we were up there for less than 30 minutes. So those Big-7 stocks are now acting as a bit of a drag. Relative strength more to the equal weighted index. As you can see, the hookup today on the relative strength there after going sideways, not really much of a difference. Now let's go to the Dow. Dow gapped higher, reversed also, basically closed unchanged, showing relative strength. This relative strength is also indicative of the fact that tech or the Big-7 are not leading because they're underrepresented in the Dow, which is a price-weighted index. The Dow's is looking to gap higher tomorrow also because CRM, a tech stock with a big weighting, is gapping up on earnings also. Let's go to mid caps. Here's the MDY. Broke higher. We'll go to that 60-minute chart again. Broke higher, but failed again. So we're just not quite ready for prime time. And if you look at an ATR chart, and here's small caps, gapped above the 200-day moving average, but failed. Failed miserably again. So we took off some of our TNA, locked that gain in on the failure at the 200-day moving average. But if you look at an ATR chart of the futures, I'll bring this in here, and you can see with the gap up was right at the +3 ATR. It's very rare that the indexes go above the +3 ATR, and you can see how many times here, this is the futures, how many times this got right into the +3 ATR and has reversed. So a mild trend higher, but not knocking it out of the park, and there's a regression to the mean issue going on here. If you look at the S&P 500, slightly different, poking its head above the 3 ATR, but not staying there any of the times that it was able to do it, including today. 45.87 was the high. The upper end is at 45.74. So we quickly gave that back up. Now, my initial thought when I looked at what was going on pre-market was that we had rested enough for this breakout to stick. That was my initial take. That was my expectation anyway, but certainly not the case. Just not quite ready yet. And more important, leaders acting just fine. Let's take a look at SPHB. This is a high beta, one of the components in the G8, the RG8, high beta breakout, holding it very clearly. Look at FFTY. This is the IBD 50, broke above its consolidation and held it. So a bit of a mixed bag. S&P, the big caps, just not ready to proceed higher yet. We may need to see a revisit at least to the 8 EMA and possibly the 21 EMA. We're two percentage points above there. Throw in the fact that at the gap up level today, we were over 5% extended from the 50-day moving average on the S&P 500. That's historically pretty extended also. If you look at the NASDAQ 100, 6.1% above. Usually 5 to 6% is the outside of the band. that you'll get on the S&P, and 6 to 7% is on the NASDAQ 100, which we saw between 6 and 7% on the 50-day moving average. So just not quite ready to go yet. Looks like we need a little bit more digestion, but leading stocks acting better than the indexes, so we can take some solace in that. Moving on, let's go to VIX. VIX popped higher today. Kind of a tight range on the VIX, considering how big the negative reversal was on the S&P 500. That's my take on it anyway. The UUP, the dollar, tight inside day today. Gold and silver, and gold and silver stocks slightly higher today. Ran into this 190 area, a little bit extended to the upside. That's GLD. Here's SLV, slightly lower, and GDX, gold and silver stocks, slightly lower also. We're playing this via NUGT. Let's go to Bitcoin. Bitcoin doing fits and starts, going higher. You can see how choppy the action is on this. Pulled back just to the 8 EMA today, down 2%. Now to bonds. Reason why we had the gap up in the morning is because bonds were gapping lower. You can see bond yields were gapping lower, I should say. Here's BND gapping up 0.5%. Here's TLT, the long bond up 1.26%. So if the price is making highs off the lows, that means the yields are making lows off the highs, and that's what we're seeing here as the 30-year goes below 4.5, and on TNX, the 10-year down 1.5%, making lower lows. So this is a completely failed breakout now. Going back to the middle of September on rates, ran up to that 5% level and have given it completely up now. Let's go to the tail of the tape. Then we'll look at a few charts. Important data point in the morning, PCE inflation data. We need to make sure that inflation doesn't rear its ugly head when that report comes in. That'll be pretty key. Day counts now from a 5-day consolidation to a 6-day consolidation with a failed breakout, but again, just not quite ready, too extended from the moving averages to just plug its way higher. Plus 20 days above the 8 EMA, that's historically very stretched. 19 days above on the 21. Taking a look at sectors, home builders, regional banks really rock today. Semiconductor, software, cyber, and real estate to the upside. Uranium, Bitcoin, oils, staples, and utilities to the downside. So what we do to the portfolio, early on strength, we added to PDD and QLD. When we reversed lower and broke that 45.68 level, we trimmed some SPXL toward the end of the day. Taking stock of the negative reversal, we trimmed some NVIDIA. Our last two buys were just a bit underwater, so we're still holding half of the position. And Tesla negative reversal at 250, and with all the big caps being drugged down, we booked a very small gain in that. And CCJ, I see the uranium complex was under pressure today. This broke the 8 EMA, which is a minor change in character. We took our gain. The gain was right in line with the S&P 500 during the holding period. So bottom line on the day, S&P 500, NASDAQ 100 gap up but reversed to red as the Big-7 was a big drag. Small caps, mid caps, leaders outperforming. Took our beta down quite a bit from 1.83 to 1.35 with the failed breakdown. And one of the Wall Street sayings that can really bite you is, from failed moves come fast moves in the other direction. So that is definitely something to be cognizant of. But even a failed move down wouldn't be the end of the world. We haven't tested the 8 EMA. We're 2% above the 21 EMA, but just not quite ready to blast off to the upper levels yet. So let's look at a couple of charts. CrowdStrike, it gapped up, did not get back into it as soon as we saw things reverse. I was waiting until 10 o'clock to see how things played out, and then I saw a bunch of things reversing. This never did, stayed strong all day, so that's a mental note we'll file away. For adding to it at a more palatable entry point, Zscaler gapped up along with it, but reversed lower to close below the 200 level by the end of the day, so we didn't take an entry in this either. Tesla, they've got a big event tomorrow after the close. Initial strength turned to weakness when it reversed off this 250 level, which is a big resistance level. Like I said, we wrapped a small gain there. CCJ, we already showed. NVIDIA hanging out, relative weakness, hanging out right above the 21, tried to break above the 8 in this little downtrend line here. With the weakness in big caps, we just reduced exposure on the failed breakout. PDD, there's quite a bit off of the highs of the day. It was very strong early, but still up 2% on the day on a day 2 higher high after earnings. And then QLD, we added to that, but did take off some of our SPXL, 40% of our SPXL on that failure at the +3 ATR. Looking for more reasonable entry points on a lot of things, raised a lot of cash, leaders acting well. We'll continue to monitor them. Let's show a couple more nice charts. Snow. This is a component of the FANG Plus index, gapping up 7% on its earnings report. Nutanix, also a great looking chart, but has pretty much already had a run, up 8% after hours. CRM reported after hours, big Dow component up 7%. NTAP, a big winner from earnings yesterday, up 14% on big volume, almost 500% above average. And let's see what else that we're holding that's doing quite well. Datadog made a new high, so we continue to hold that. And let's see, I think we covered everything well. AMD, we still have a half size in this. That made higher high, is still holding the breakout from the cup and handle. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, you can reach out and email my partner, Dan Stewart, dan@revereasset.com. Feel free to leave comments on our YouTube page. Like, subscribe, share it. That's a way to get the word out that a common sense approach to the market, participating in market uptrends and getting out of the way when the market is risky, is a sleep at night approach to the markets, because it's not how much you make in the markets, it's how much of that you can keep. That's what the rule we strive to follow at Revere. And with that, I'll wrap up the video for Wednesday,